Hello investors and traders, today I'll speak about top 3 dividend stocks to buy right now, a passive income and of course I would like to receive a stable cash flow. So let's start with the 3 best dividends stocks to buy right now. So the first company for today it's Tyson Foods. If we'll check its chart now, it's traded at a level of 50 bucks per one stock. Here since 2015 on a monthly time frame. Now it's a major support level for the last 8 years, and the momentum indicator RSI now is 32, telling us that now the stock already oversold. Let's have a look on fundamental parameters. So the market cap of this company is 17 billion bucks. The dividend yield, the forward yield, is around 4%. The company founded more than 80 years ago. So this company, Tyson Foods, engaged in the production of frozen and refrigerated food products. It operates throughout the following segments: beef, pork, chicken, and prepared foods. The beef segment includes processing live feed cattle and fabricating raised beef carcasses into primal and subprimal meat cuts and case-ready products. If we'll check its value now, the PS less than 1 price per revenue, so it's very cheap, and the PE ratio also is 8. By the way, the lowest value so since 2019, so the valuation now for this company is very low. The revenue of this company continued to grow for the last 5 years, and the marginality actually is the same marginality as 5 years ago. The net income margin is 6% and gross profit margin 12%. So it's not a highly marginal business, but in my mind very stable. Let's have a look on the revenue breakdown. Most of it the company earned, of course, 95% in US and the other 5 in the other companies and other countries. The segments, most of the revenue are in the beef segment. Also the chicken segment give the company more than 30%, and prepared foods about 18%. Let's have a look on its on the company history. So we see here that the dividend yield is 3.8%. The dividend increase track record, the impressive 11%. The annualized 3-year dividend growth is more than 5%, and dividend payout ratio less than 30. So the payout ratio here is very low, and here a great and a very big room for the company even to increase its dividend payments. Also here we may see that now the amount of debt is decreasing for last 4 years for Tyson Foods. 4 years ago the amount of debt was about 12 billion bucks. Now it's less than 9. Also by the way, the company has 1 billion bucks of cash on the balance sheet, and of course now the interest rates, the Fed fund rate 5.25%, and we live in an environment of increased highly interest rates. That's why of course it very sign that management understand that it's a good time to decrease its leverage. Also, let's have a look on the projections, the forecast for the company. So the current price 50 bucks. We see that average of the estimates, the top 10 analysts, we see that the average price 61. So it's the upside potential is 21%, and the maximum projection is 80. It can give you a value or upside of 57% up. So generally speaking here, what I see, a stable company, a profitable dividend yield around 4%, and major support level over 50 bucks. By the way, the company now already down more than 50% from its highest level, so why not to buy and to pick this dividend stock in your portfolio. Let's have a look on the second stock for today. It's Valero Energy. It's energy mineral oil refining company, a US company. Before, let's have a look on its on its chart. So here, look, actually after the pandemic lows, we for last years trading in a increasing trend, upside trend. It's even don't broken here. The momentum indicator now is oversold. It's a good sign. And also, I remember I traded this company at the pandemic time, at COVID-18, 2020. Look here, the growth potential was just huge. If you bought this company about 32, 34 bucks, you could made more than 30%, more than 300% in 2 years. So actually it's a huge amount of money. It's a lot of money. You could become a millionaire with the stock, but now this company, we see a correction. A correction is, by the way, about 30% from its high levels, and a nice dividend yield of 3.8%. So I traded a lot. I even earned money on this company. So now I think in my mind nice levels. It can be nice levels to buy this stock. By the way, this company is highly correlated with the Brent, the oil price. Look here, we may see it's the orange one. It's the Brent price for last year. So we see actually it's the same momentum sales. So they traded very closely to each other. So if you can predict, if you're a good predictor of oil price, so Valero Energy can be a nice stock to trade it. Its ticker, by the way, VLO. So here also we see a correction in the oil price, and at the same time, of course, the VLO also now in last year in a correctional this correction pattern. So generally speaking, the technical analysis telling me that now it could be even a small correction, maybe a correction of 6%, but then the window opportunity to buy the stock is still continuing. The dividend yield in this case can be even closer to 4%. Let's have a look on it. Fundamental parameters, of course. So market cap 38 billion bucks, dividend yield, the forward yield 3.8%. This company engages manufacturers and marketing of transportation fuels and petroleum products. It operates throughout the following business segments: refinery, ethanol, and renewable diesel. The valuation now for this company, the PE ratio 3, maybe here this mistake, it's very cheap, but the price per revenue is less than 1, so for me now it's very cheap stock. The revenue for this company for the last 5 years continued to grow, and look, after COVID-19 the company showed a loss for the last 3 years, the marginality increasing, so it's positive sign. Net income margin is 7%. By country, the revenue breakdown, most of its revenue the company earned from the refining sector, and also more than 70% the company earns in the US. Also, if we'll check its dividend history, you will see that the last 3 years the company just froze its dividend per share, but still the dividend yield trailing 12 months is about 3.7%, so quite high dividend yield. Of course, it's very impressive. By the way, the payout ratio here is very low, only 11%. So very huge potential for this company to increase the dividend payments. Also, we may see that the amount of debt decreasing, and also the free cash flow is about 11%. 11 billion bucks. I remind you that usually from the free cash flow company pays dividends and can offer to itself a nice stock buybacks. Also, we see that based on 22 analysts giving stock rating to Valero in the past months, 14 of them is telling that now this company is a strong buy, and 2 of them to buy. The minimum upside potential 17%, and the average more than 40%. So quite impressive projections for this company. And let's have a look on the last company for today. It's Pfizer. So Pfizer, of course, it's a healthcare company. It's made a lot of $1 billion on the vaccine from COVID-19, and now dividend yield more than 4%. So actually here we see that there are two major support levels. Now we are traded very close to one of them, and the second one, the downside potential, and in this case more than 20%, but now the dividend yield already very high. Let's have a look on its fundamentals. So market cap more than $20 billion, the dividend yield 4.2%. Why I'm telling that it's not realistic that we may see this stock much lower. Look, the P ratio is 7 and the PS only 2, so actually it's the lowest values for the last few years, and actually it's twice cheaper than the average for S&P 500 companies. So valuation is very cheap for now for Pfizer. The revenue continue to grow, and the marginality is very high. Net income margin more than 30%. For me, it's quite impressive. Also, last 5 years, if we check the dividend history, we may see that company steadily continue to increase its dividend payments, dividend per share, and the payout ratio is very low, or only 30%. Also, the company continue to decrease its amount of debt. It's also a positive sign. Interest rates now are very high. So generally speaking, Tyson Foods, Valero, and Pfizer are the three stocks for me for today. We speak about a dividend yield about 4%, three great dividend stocks to buy right now. So of course, if you like this video, press the like button. Don't forget to subscribe to my channel, and see you on the next time. Bye.